Hi guys, it's Stock Curry, and I'm going to explain what the Fed said that caused the markets to crash today. I've also got an update on the $1 million challenge portfolio, which was up 13% today, and I've also got a few stock picks to help you turn your portfolio around. So let's get into it! Okay, so the reason the markets crashed today is because the Fed released their meeting minutes from their December meeting. Now, Meet Kevin did a great live stream explaining everything in the meeting minutes. If you want to watch his full hour-long explanation, I'll put a link to his video in the description of this video. For now, I'll just give you a summary. First, the Fed discussed not only tapering, but also reducing their balance sheet, which means selling their bond assets. Now, this news actually was reported a day early by the Wall Street Journal yesterday, and if you want an explanation on that, you can go watch the video that I uploaded yesterday. Now, the minutes had more detail than what the Wall Street Journal reported on yesterday, and the important detail is that the Fed sees the economy as stronger and inflation is higher than it did the last time that they reduced their portfolio. So that means the Fed is going to be comfortable reducing their assets at a faster pace than they did the last time they sold bonds. And that is going to cause a faster drop in the markets than what was previously expected. Now, that said, the Fed actually said that it would be easier to raise interest rates in 2022 than to sell off their assets, because raising interest rates is easier to communicate to the public. So not only did we have the Fed wanting to reduce their balance sheet at a faster pace, they also want to raise interest rates at a faster pace. Further, the Fed wants to sell bonds faster in order to reduce the usage of the overnight reverse repos that are currently at their highest level ever. The Fed also recognized that raising interest rates and reducing their balance sheet could trigger a recession. And that's something that we've talked about in prior videos when we looked at the period during the late 1970s and early 1980s, which was the last time inflation was as high as it is now. The Fed actually triggered multiple recessions during that time period, which in turn resulted in one of the longest bear markets in the history of the stock market. And inflation continues to get worse too, which is causing further concern for the Fed. The Fed is actually concerned about the fact that in the past, when the pandemic cases rose, we saw inflation drop. But this time around, as Omicron rose, we saw inflation continue to rise as well. That means inflation is broadening and it's starting to get out of control, which could lead to hyperinflation if the Fed doesn't step in and start taking aggressive action to curb inflation. And most importantly, the Fed said that the fight to curb inflation, including raising interest rates and selling bonds, will take years. The Fed is expecting to continue raising interest rates and selling bonds for the next 2 to 3 years. So overall, the meeting minutes were much worse than expected, and that's why we saw the markets, especially the NASDAQ, absolutely tank today. Now, the $1 million challenge portfolio was actually up 12.8% today, and here's why. Yesterday, after we got the Wall Street Journal report, we saw the NASDAQ go down. I mean, the NASDAQ literally did a complete 180. It went from extremely bullish on Monday to extremely bearish on Tuesday. And when I saw that, I decided, you know what? We've got a lot of bullish positions in the $1 million challenge portfolio. It's probably going to be a good idea to open up a hedge in case the NASDAQ continues to drop. And so yesterday, we actually opened up 2 QQQ put options on the NASDAQ. And even though the market rebounded after I opened those positions yesterday, the options were down 50% as of the close yesterday. Today, as the NASDAQ absolutely tanked, those options, those put options, went up 600% today, in one day, a 600% gain. Now, I was already down 50% yesterday, so net of that, I ended up closing out the options today for about a 300% gain. And that 300% gain is what saved the $1 million challenge portfolio from losing money, and that's why the $1 million challenge portfolio was up 12.8% today, even though the market overall was just absolutely blood red. Now, if you want to follow along as far as what we're buying and selling in the $1 million challenge portfolio, you can do so. I post all of the buys and sells free of charge on Twitter. You can follow me on Twitter at twitter.com/realscottcurry. There were quite a few people on Twitter and the Discord who followed along. They bought those QQQ puts, and they were up anywhere from 30 to 300% depending upon when they bought and which option they actually purchased. Now, if you want to follow along in the Discord, where we actually discuss all these plays before we make them, you can join the free Discord, and the free Discord is available. I've got an application over on my website at stockcurry.vip/Discord. The only reason I have the application there is to help prevent scammers. The truth is, every single person who applies is going to get approved. All right, let's get into today's stock picks, and I'll give you a little bit more of an update on the $1 Million Challenge portfolio, what plays we made today. For those of you guys who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stocks for you. Every day I spend hours and hours and hours watching videos from the top finance channels, and then I consolidate all of their stock picks, and I put them together into a single video. I give you both the cliff notes on their stock picks, as well as my analysis on their stock picks. Now, if anything I talk about today piques your interest, make sure you listen to who they talked about it, and then go watch their video to get the full details of what they said. Now, all I ask for putting all of this together for you guys is that you hit that like button, subscribe, and follow the page so that you can get notified when I release my next video. In fact, I'll give you 5 seconds to do that right now. All right, before we get into today's stock picks, I do want to remind you that I am not a financial advisor. Nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. If you're wondering what you're looking at right now, this is the Webull desktop app. Webull is the app that I use for my trading, and it is also the app that I use in all of my videos. If you'd like to get 2 free stocks worth up to $3,300, you can sign up for Webull using my link in the description below. When you sign up using my link in the description below and deposit just $1, Webull will send you 2 free stocks worth up to $3,300. All right, let's get into today's stock picks. But first, let's do an update on the $1 Million Challenge portfolio. So the first thing I did this morning is I bought an F, which is Ford, and I bought an F credit bear call spread. So this will actually make max profit so long as F closes at or below $24.50 on Friday. Now, F was extremely volatile today, but it did close the day at $23.66, so we're almost $1 into the money on F. Now, the next thing I did is about $35 for the G&W, just trying to get some minor diversification compared to just going all in on GS and C and stocks like that. So it's another banking stock that should perform well this year. It's just a straight stock that I bought. And the last thing I did is that I sold those QQQ $390 Friday puts that we had bought yesterday. Now you can see here that we bought the puts yesterday at $1.45, and then I sold one at $5.11 with about an hour left in the close. The reason I did that is because a lot of times when we get a big drop in the markets, we'll actually get a rebound with about 1 hour left to close. So I wanted to trim the position and sell one in case the markets went up. But the markets did not go up. Actually, they continued to drop further. So I closed the second one about 2 minutes before the close of the market, and I sold that one at $6.42. So overall, the QQQ was up about 300% from when we bought in yesterday. And that is why we were able to make money in the market today. We actually had a lot of these credit bull put spreads go down today because we had bought these on Monday when the markets were looking very, very bullish. And so when the markets turn bearish, well, that really screws up these options. And so that's why I had to go do that hedge. So on the options right now, F is currently at max profit, PFE is currently at max profit. These two are both bearish plays. SOFI is at max profit. It is a bullish play. However, AMD, AAPL, and TSLA are all down at the current time. Now, AMD is down a ton. I've got no hope for this rebounding by Friday, but AAPL and TSLA are still very close to the money. So if we can get some green on Thursday and Friday, I do think we can get back into the money on AAPL and TSLA. But again, nobody really knows what's going to happen from day to day. I have no clue if we're going to be in the money or not. Now, as far as the QQQ puts and the hedges are concerned, I saw that QQQ was going up a little bit after hours. I also saw that we are very, very close to the 100-day EMA here, which closed today at $381.72. So my thought was we had a major, major drop today. If the markets trade fairly flat on Thursday, then those put options are going to drop significantly in value because the volatility is going to go down, which is measured by Vega, and Vega goes down on the options. It's going to cause the price of the options to go down. So my thought here was if the markets trade fairly flat or even up a little bit on Thursday, then I can rebuy that QQQ hedge, only this time, rather than doing a weekly, I'm going to be doing a monthly. So we'll be looking to buy that either expiring towards the end of this month, around January 31st, or the actual February monthly one. Either way, I do plan on reopening a QQQ put option as a hedge in this portfolio, but we're going to do a lot further out. We're not going to do the weekly. Now, there is a chance that we're not going to get a rebound at all. In fact, the futures right down are down about 0.6% on QQQ. So there's a good chance that we are just going to keep on dropping. Like I put in my Twitter post today, when we get a lot of rejections on a resistance level and the markets go down, 100% of the time over the past 10 years that this has happened, the QQQ has dropped down to below the 100-day EMA, and in some cases dropped all the way down below the 300-day EMA in just 3 weeks. Now, we are 2 days into this, so if you think about that, we got the rest of this week, the following week, and then the week after that. So through about the end of January, we can see a drop. But again, it's not going to drop literally every single day. We'll get things like this where we had 2 days of drop, a green day, and then 2 days drop, a green day, and it kind of slowly goes down. It doesn't literally just drop every single day. So that's why I think there's a good chance we'll get some flat or maybe even a slight rebound on Thursday and Friday, and that is where I'm hoping to be able to rebuy those QQQ put options at a lower price. Now, again, there's no guarantees this is going to happen. We could literally just see a tank, kind of like we did in March of 2020, but I don't think that's going to happen. I think we're going to hit some resistance here at the 100-day EMA, flatten out a little bit, and be able to buy some of those put options at a little bit of a discount. Okay, now let's get into the stock picks, and we'll talk about some things that you can buy to turn your portfolio around, as well as some things you should probably stay away from. And the first stock we're going to talk about today is BBBY, which is Bed Bath & Beyond. Joseph Hogue bought BBBY last year, and he continues to hold it. He thinks it will perform well in 2022 as shoppers return to stores. Now, BBBY is a deep value stock with a price-to-sales ratio of only 0.18. The problem, though, is that BBBY has seen decreasing revenues every year for the past 3 years, and they're not profitable. They have $970 million in cash on hand and $1.18 billion in debt. So BBBY is burning cash, and eventually they are going to run out of money, and they will most likely have to declare bankruptcy. At their current cash burn rate of $125 million per quarter, BBBY will be out of cash by the end of next year. This is a dying company that reminds me a lot of Sears and JCPenney. Both of those companies were able to stay NASDAQ listed for years as they sold properties and performed accounting tricks to keep their share price up. Eventually, though, both of their stocks were delisted. Sears eventually went out of business, and JCPenney is well on its way to going out of business. Now, I would stay away from BBBY. So just because a stock is cheap does not mean that it's a good buy. This is one that I think Joseph Hogue will continue to lose money on. Joseph Hogue did give a good point about the possibility for a short-term run-up, and that is the fact that BBBY is heavily shorted and is also a favorite of retail investors. So any good news at all, such as positive Q4 numbers from, say, better than expected holiday shopping season, could drive the share price up temporarily. But betting on a rise in interest from retail investors and a limited short squeeze is quite the gamble, and just not one that I would take. The next stocks that we're going to talk about today are C and GS. This is Citigroup and Goldman Sachs. Joseph Hogue said he is buying more C this month in anticipation of banking stocks rising this year. I completely agree that banking stocks will most likely be the best performing sector this year, and they will also make higher profits as interest rates rise. I personally like GS and C the best, as these two banking stocks have the lowest PE ratios. C is currently at a PE ratio of 6, and GS has a PE ratio of 6.6. So both are extremely undervalued, and both should rise significantly in 2022, possibly even doubling in price again this year, just like they did last year. And next up is GRPN. This is Groupon. Back on March 4th, the traveling trader said he was looking to buy Groupon back when it was trading at $50 a share. GRPN has now dropped 50% from that price, and it is down 60% from its all-time high price of $64.69. Now, Joseph Hogue is saying that GRPN is one of the best stocks to buy for January. While I'm concerned about buying any stocks right now, since I do think we are going to get a bear market, I must admit that after falling for months, GRPN has finally turned turn bullish on the technicals. It is showing 100% confirmation of a rebound, and even after today's drop of 4%, GRPN is still bullish on the technicals. Fundamentally, GRPN is trading at a current PE of 7.95 and a forward PE of 21.8. That means the stock is pricing in decreasing earnings rather than growth. Further, the price to sales ratio is 0.51, so GRPN is a solid value stock. Now, taking a look at their cash and debt to determine how rising interest rates might affect the stock, we can see that GRPN has $476 million in cash on hand, no short-term debt, and only $223 million worth of long-term debt. So GRPN could pay off all of their debt if interest rates rise too much. Overall, GRPN will be able to get through this period of rising interest rates just fine. And while they haven't turned a profit in 3 years, they are expected to report a profit for fiscal year 2021. So overall, I actually like this play. It's undervalued fundamentally, it's profitable, and they have more cash on hand than they do debt. So while I would be very cautious buying stocks right now, I do like GRPN at the current price. Joseph Hogue also thinks GRPN would make a good takeover target, which would cause the stock price to jump by 30 to 40% if a takeover is announced. And the last stock we're going to talk about today is SQ. This is Square. Keenan Gray said he thinks SQ will double in price this year. But I want to remind you that this is a fintech company and not a banking stock. Banking stocks were only down 1 or 2% on Tuesday. SQ was down over 8%. The reason is because fintech companies make their money from financial service fees, such as credit card processing fees. Banks, on the other hand, make most of their money from loans. And as interest rates rise, loan rates will rise as well, which means banks will make more money due to the higher interest rates on the money that they are lending out. But fintech companies will see reduced revenues as people shop less and use financial services less due to having less expendable cash to spend. That is one reason why we saw SQ's revenues drop so much last quarter and why the stock is dropping in price right now. And it's not like SQ is trading at a discount. Fundamentally, it is still expensive with a forward PE ratio of 85 and a price to sales ratio of 7.3. So it's very possible that we will see SQ drop back down to the price it was trading at all the way back in 2019, which was between $60 and $90 per share. Further, SQ is technically a falling knife right now. We do have some more support levels coming up, but so far SQ has continued to break below each support level. The next support levels are at 135, 110, 90, 80, and $60. From today's price action, we can see that SQ is obviously being negatively affected by a drop in the stock market, and if the stock market does enter bear territory, we could see SQ bottom out at anywhere between $60 and $90 per share. So I would stay away from SQ for the time being unless you want to open up a bearish position on it. Alright, I hope you enjoyed this video and get a lot out of it. Comment down below what you think the market is going to do for the rest of this week. And again, if you want to join the free Discord to follow along with a $1 Million Challenge portfolio, you can do so on the website. Just go to stockcurry.vip/Discord. Fill out the application and you will get an invite link to the Discord. Again, every single person who fills out the application is going to get approved. The application is just there to prevent scammers. Now, if you don't currently have a broker to trade with, you can sign up for Webull using my link in the description below. When you sign up for Webull and you deposit just $1, Webull's going to send you 2 free stocks worth up to $3,300 when you sign up using my link in the description below. Now, if you're not a U.S. resident or if you're looking to trade OTC penny stocks, then I recommend Interactive Brokers. Interactive Brokers is the best trading platform for non-U.S. residents, and it also includes multi-leg options and cryptocurrencies. And if you want to sign up for Interactive Brokers, I've got a link for that in the description as well. Now, I do want to remind you that I have material connections with both Webull and Interactive Brokers, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, finally, I want to remind you to hit that like button, subscribe, and follow the page if you haven't already. I hope you have a lot of success trading, and I will see you tomorrow.